I feel like I haven't seen you in a while.
I know, I know. I'm excited to be here.
Good. How are you doing?
I'm good. Got a little scratchy throat, but other than that, pretty good.
Do you have allergies? Because I have allergies to like everything, and ever since like the Canada wildfires, and I don't know if it's just an effect from that or if it like makes your allergies worse, but oof, it's bad.
Totally. And I'm sorry I missed your Ignite event last week.
That is okay.
I'm like bummed. They didn't record it, did they?
Brianna was very like in person only this time. So it wasn't since obviously we've known each other for a long time, I don't think you missed anything too crazy. It probably would have been a lot of what you've heard a lot over the years.
Okay, thank you.
Yes. Hello, Robin.
Hello, better unmute myself.
And Michael.
Hi, Kate. Hi, Michael.
Guys, how's it going?
Good.
Good.
Alrighty, we'll give it.
I don't know you.
Oh, I'm newer. This is my first year.
Okay, all right.
Oh, Michael, how was the open house?
Busy. It was good. Yeah. So we have one offer, and I'm hoping to have a second offer. I'm not in love with the first offer, so I'm hoping to have another offer today.
Yep.
And luckily the clients are like being patient and
that's nice.
Deep breath. So yeah. But
Deep
thank
breath,
you.
yeah.
I printed out all of the flyers and everything. Everybody loved them. So
oh good. Yay.
Yeah. It's amazing that the agents do not know about recasting, Robin. So
no. Right.
Yeah.
Don't understand it, right? I know it's a little bit confusing.
I heard bridge loan about 3 times and I was like,
You're like, no, I can tell you something. Yeah.
And then Brianna was like, you don't have to help them with their financing,
Right? I know, but when you know something that they don't know, you try to kind of help them out, right? Like,
no, that's the educator in me. I was like, well, there's this, and you could.
Yeah.
So
I think something that both Robin and I might struggle with too is we don't want to be annoying about things because it feels like we're beating a dead horse, like saying the same thing over and over again. But we like it is a good reminder sometimes that not everybody like sees every email or sees every post or attends every team meeting, that it is good to repeat some of those things. Because I'm always like, oh gosh, I feel like I'm being annoying because I've talked about this a bunch. But that is that when that got brought up there, I was very surprised that so
well,
cute.
I mean, I was at the open houses, like the agents didn't know, like it was just, like, so it was like an agent from Edina, not to like name names, but
sure, yeah,
bank or whatever. Yeah. They were just like, I was like, okay, well, there's this. You should maybe look into it. Google it.
Oh my goodness!
Yeah, right? Yeah, Google it. Do a search.
If you don't have a Mary and Robin, I'm sorry.
Yeah, right. I know. Well, that's just it. A lot of offices don't have a lot of training, right? I mean, not all of them have the kind of training that not us, but I mean that our office has.
Yeah, it just made me thankful that, there's so much going on in our office to learn.
Yeah.
Well, Michael,
great reminder.
They'll remember that those agents that you AKA helped out, they'll remember that. And in another situation, when you're, if you have another listing and they come to your open house, they'll think, "Ooh, I want to do with this guy. I want to work with this guy."
Yeah.
Help me.
Because I also helped another, like the agent was like, "Yeah, I need drone footage," and I was like, "Here, Mill City," and she called them and got it done, and I was like, because they're the ones that put the offer in. I'm like, well, if we end up going with that offer, they have to sell their house. I want it to sell. I mean, I don't know if that's bad to do or not, Kate, but I was like, help them out.
Can someone confirm, are you seeing just the PowerPoint slide?
I see it.
Okay, cool. That's what I'm going to move us up so people can see us too.
No, Michael, I don't think it's ever bad to help them because this is a small industry. You run into these people again. So I think it's always good to try to be helpful and kind and you know what I mean?
Okay.
Whatever you can do. Yeah.
Keep going in this direction. Thanks all.
Yeah.
Yeah.
Absolutely.
Okay.
Hi, who's that? Who's CM Child of God?
Is it, are people in the office maybe, Mary?
No, it's just via Zoom.
Okay. Okay.
I just don't know their first name. That was all.
Oh yeah, Mary.
Yeah,
You know.
I don't know. Do you want to unmute and introduce yourself?
Talk to all of us weirdos over here.
Oh, Natalia. Oh, sorry. I just
Okay, cool.
Oh yeah, Natalia. Yep.
Oh, hi. Oh, okay.
Hi, Natalia.
At work. She's
Yeah. Can't chat maybe.
Okay.
Huh?
we'll be quiet.
Okay. And then another question for those of you watching, can you see us or are you just seeing the screen?
Both.
Okay, that's what I want to make sure of. Okay, and so I've got the PowerPoint up. I'm not going to be talking about this. This is going to be Robin, but I'll pipe in at the end. If you have questions, feel free to like make this interactive, like live ask questions. Natalia, feel free to type in your questions. I have the chat box up. So I'm pretty pleasantly surprised that we have a few people on because PMI is not the most interesting topic.
Yeah.
Shocking. I know.
Yeah.
But
I know.
it is one, and Robin mentioned this if we saw you on Friday, but it's a very important one. It's one that, you know, like if somebody's going through the mortgage process, it's something that I think people get really stressed about because obviously it adds to your monthly payment. And so making sure you know ways of communicating with your clients on how they can get rid of it and some of the benefits of like today's market specifically, that's kind of what we wanted to touch on today. So with that said, Robin, I will let you take it away.
Yeah, perfect. Oh, hi, Ginny. Got to join her. Awesome.
Scott Johnson also joined. Hello, Scott.
Oh yeah, hi, Scott. Good. Yeah, so you'll watch the chat box, Mary, maybe, and then I'll just chat. Okay, I'll just yammer on. Okay, so basically, I don't know how much we want to get into but we should probably just maybe quickly start from the beginning of it as far as hi, Scott. So PMI is private mortgage insurance. And we say PMI, we are only talking conventional Fannie Freddie loans, right? This is not VA, this is not FHA. Right now we are, because when you're talking FHA, that's mortgage insurance, not private mortgage insurance. So in our world, there's PMI and there's MI. This, and I'll touch on the FHA too, just for you guys to know how that works. But so we're talking Fannie Freddie conventional loans. PMI means private mortgage insurance. And it used to be, I don't keep track of the years so much, but a zillion years ago, there was no way for anybody to get a home unless they put 20% down, right? You didn't have 20%, you didn't buy a house. And then somebody said, okay, we can do insurance. And how about we insure the loan? And then you can, so basically somebody came up with a great idea that put mortgage insurance on there and people can do 3% down, 5% down, anything less than 20% down. So hence PMI came around and first-time home buyers were then able to start buying houses with less than 20%. So I think the guts of this presentation is this slide right here. We have more, but basically what happens is somebody buys a house, they put less than 20% down, and it used to be you just waited and waited and waited and waited and waited and waited until your balance came way down just by making payments to the point where you had 78% loan to value and your PMI automatically came off. That's the old way, right? That's been gone for a while. So people do not have to wait to have their PMI automatically removed. So when you look at this slide, you see where there's the two red O's, and it's kind of hard to understand, but that means original value, right? And when you look at the kind of the green, is that green? A green C, that means the current value. So if you want to wait and wait and wait and wait, and you just don't understand the values, your PMI will automatically fall off without you doing anything. But people very seldom ever go that route anymore because we know what our values are. We can go online now and look it up, and we know, what kind of equity we have. So people go in and get rid of their mortgage insurance much, 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 much faster now. So basically, here's kind of this in a nutshell. If you do one of two things, and I wrote this down so I would kind of say it in kind of in an easy way. And we do recasting too. That's another, we'll touch on that. But so there's two ways to get rid of PMI. You can get rid of PMI automatically when it reaches its own calculation. You can get rid of PMI less than 2 years or more than 2 years. So the only way to get rid of PMI, if you have owned this property less than 2 years, is number one, you have done what we call substantial improvements, and that is very subjective. So substantial improvements might be that you bought a house in Edina for $400,000, and it literally you did so much work to it because you got it and it's now worth $1 million. That's substantial. But I don't think they consider substantial like I updated part of my basement and now it's worth 20 grand more. Like that's probably not substantial, but that is up to a Fannie and Freddie rule. So they get to dictate that. But what happens is it's one of those two things. Either you have a substantial improvement on the house, so the value is way up, or you have bought that, like a big principal balance payment. So you bought that principal balance way down, right? At least to the 80%. And if you, that's why recasting works, because on recasting, you can buy down that balance to 80% and get rid of the PMI on a recasting, like Michael was just talking about. So the recasting is good because you can make a principal balance. We can re-amortize the payment, which is lovely too, because you might want a smaller payment than what you originally started with, especially if you're putting like 100 grand down, it's a large sum. And then you end up getting to get rid of the PMI at the same time, which is that's a huge benefit. So if you ended up maybe wanting to put 30% down originally, only put 5% down because you didn't sell your house, you do recasting. You call us up and say, we want to recast our loan. We say, okay, it's $300. Here's a form to fill out. And you say, and by the way, I want to get rid of my PMI and I'm going to give you, 80 grand. Okay, great. All gets done in one nice, transaction and everyone ends up happy, right? And they did not have to sell their house before they bought the new house, right? And that's the way everybody kind of wants to go. I mean, that's the way you almost have to go in this crazy market, right? So that's how you get rid of PMI less than 2 years. And then if you go, and then between 2 to 5 years, you can do it off of the current value. So if you just think that your value has gone up significantly and we all can look at a zillion sites on the internet, right? And we can see where the values are. As agents, you always kind of know that. But even as buyers, just consumers, they know where the value of their house is pretty much. So sometimes they're going to need to be at 75%, sometimes at 80%. And just remember this, different lenders have different regulations or different rules. So Fannie and Freddie actually set these, and because New American Funding is a direct lender, we don't add overlays and try to have extra obligations, on like extra rules on anything, but a lot of lenders do. So I think we're one of the few that is actually a direct that doesn't have the overlays. So if Fannie and Freddie say you can get rid of it, we should be able to get rid of it. So we try to keep things very simple. So I don't know if that's kind of confusing. That's kind of the guts of everything, right? When can I do this? So it's automated, it's under 2 years, and it's over 2 years, right? That's kind of the key points to that. I think, does anybody want to ask questions about that, or we can go to the next slide, Mary, if you're good.
I'd be curious to know which.
Oh, go for it.
I'd be curious to know which lenders have a lot of rules, or can you say?
No, we would have, the borrower would have to call their servicer and say, hey, because we wouldn't have any idea.
Would you assume, Robin, I know what they say about assuming, but would you assume that non-direct lenders would have more like overlays and things like that.
Yeah, yeah, yeah. And they can change all the time. Like one day they can decide to not, the next day they can decide, they've changed their rule, and because they're not maybe, well, maybe they can even be direct but still have overlays, you know what I mean? But if they're non-direct, yeah, who knows what that broker might be. And we service our own loans, so we can kind of set our own rules with that stuff, and a lot of lenders can't do that. So with us, here's the what do you call it, caveats of the world in PMI. You cannot have late payments and then request PMI to come off, because it's never going to happen. Because right, PMI, the whole point of PMI is to protect the lender against default and foreclosure, right? If somebody has trouble making their payments, that PMI comes into play to keep that lender from having a big loss on that loan if they foreclose on it, right? If there's any kind of foreclosure actions, yeah. So no late mortgage payments prior 12 months. If they've had late, they're probably going to have to wait at least 12 months for that, sometimes 2 years. No second liens on the home, that seems kind of crazy, but when you have PMI on your house, it probably means you went 3 or 5 or 10, right? You probably had a fairly high loan to value to begin with. So you probably don't have a second on it, most likely, only because the CLTV on that first and second combined would be a very high loan to value. So you don't see a lot of second mortgages on a loan that has PMI on it. It can happen.
Is that just another way of saying second mortgage? That's actually a term I don't know. So I feel like
that's just a second mortgage. Yep. If you have a second loan on your house, if you have a second mortgage, then you may not be able to get rid of the PMI. I don't know that that's always the case, but I think that would be a much, much, much lower CLTV and LTV. So servicers have to respond to the borrowers. They can't, a borrower or a servicer cannot just ignore, a consumer's request to get PMI taken off of there. They can't just say, oh yeah, we're not going to respond to that, we're good. Of course, PMI is nice for a lender because it protects them against default, but they can't leave it on there just because they want to. They have to follow the regulations. So, and it says evidence of home value confirmed through GSE's collateral tool. So GSE just stands for government sponsored enterprise. If that isn't a generic term, I don't know what is. But it's basically there's all kinds of like we call them AVM sometimes, like automated value models, those kind, like where a lender can get a pretty good idea automated without always having to do an appraisal, and they can get an idea if they think that value is there to get rid of that PMI. So they don't always have to do $500-600 appraisal. Sometimes they do, sometimes they don't. So it depends on if there's information out there to get an AVM on, right? I don't know if an automated value is always available on every house, because if it was, we would probably get a lot more PIWs, right? A lot more, appraisal waivers on some of our homes that we can't get because sometimes there's not enough information on a home to get a waiver and probably to get an automated value, but that's that information. So those are kind of the caveats of getting rid of PMI. So yeah, ways to cancel faster, which we kind of talked about, right? They can pay ahead on the mortgage. They can do a big lump sum. If they do substantial improvements, like we said, that's very subjective. I always tell buyers when I'm talking to them, always be aware of the value of your home. Watch that all the time, because that monthly mortgage insurance on some of these loans can be really expensive. That's a huge savings if they can get rid of that, right? I mean, it can be $250 on some, and here's a little bit of info. So when people say, how much is the mortgage insurance? There are so many factors in the mortgage insurance. There is no monthly number on mortgage insurance. It's off the loan to value. It's off their FICO score. It's off the kind of house. It's got almost as many adjusters of interest rate, right? So the PMI is calculated. Their FICO score and their LTV are the two big ones. So once we have all that, and it's based off the loan amount, so then that's how we know once we have all that, we calculate in the system. And I think we have maybe 8 or 10 PMI companies that we can go through. We have a system, and we have, which I don't know if everybody has this, but we have a way to put in their parameters and then let it kick out which of those mortgage insurance companies is the best price for that particular client. Because I could try to pull the PMI numbers on every single, it would take forever, right? But we go into our pricing system, and we can just click a button and we say, you know, get best PMI on there, and it pulls in who is the best, because some PMI companies might be better with a lower FICO score. Some might give you a benefit if you know, with a lower PMI, if you have the, you know, the LTV is better. So all PMI companies are slightly different. So we have a way to really price those out and try to be competitive with that. And refinances, yeah, so anytime you have a refinance under 80%, you get rid of the PMI too. So a lot of people have been doing that in the last year and a half. Wow, like crazy. So that's good, because our values have been going up dramatically, right? So a lot of people have a lot of equity and really want to get rid of that PMI as fast as they can. And refinancing is a great way to do that. So, all right, Mary. Okay. So other tips for borrowers using original value. Yeah, so if you're going to use the original value, you do basically have to contact the servicer. And you really have to say, I want to get rid of my mortgage insurance. And literally whoever is servicing their loan, and you know, these loans can be sold to different, it can be sold and then it can be sold again. And so they have to call, not their loan officer, not the original, they have to, whoever is servicing their loan at the time they want to get rid of this, they have to call that servicer or lender that has it, you know, that's servicing their loan, and speak to them and basically say, I think I have the value and I want to get rid of my PMI. If they say no, then you certainly can kind of dispute that. Because that you should be able to get rid of it, because Fannie and Freddie will let you. And Fannie and Freddie are the ones who get to set these guidelines, not the servicers, even though they can have some goofy overlays. So again, we do not, but some lenders will, some servicers will. Yeah, I think that's it on that one, Mary.
Oh, before we get into this,
yeah.
Was there anything else, Robin, that you think is important to like consider?
Yeah. Let's do a quick little, and those slides actually came from one of the PMI companies that we work with, because we get PMI companies coming to us all the time. And so that was some of the slides that they had sent to us. I think it was just a couple of weeks ago in one of our loan officer meetings. So here's the other thing. So remember when we're talking about how to get rid of the PMI, these are for owner-occupied primary homes. And it actually can be a second home too, as long as it's a primary. But when you run into like an investment property or a 2-unit duplex where they live in one side and, you know, maybe rent out the other, those PMI rules change. So the main rules that everybody kind of knows and what we've been talking about, those are for, again, owner-occupied, like primary and second homes, because usually a second home is something they live in, right? So make sure, yeah, so we talked about recasting, that we're direct, no overlays. So here's the deal. So VA has no mortgage insurance, right? VA has an upfront funding fee, which can be fairly expensive, which is why we don't always take somebody on a VA loan. We'll switch them into conventional, because conventional can sometimes have no mortgage insurance and no funding fee and no upfront. So VA has a funding fee, no monthly. FHA has upfront of 1.75. It's fairly expensive. It usually gets tacked onto the loan amount, and it does have monthly. So if we can take anybody conventional, we always try to take them conventional, right? We'll never put somebody into an FHA loan unless they need to be in an FHA loan. And that's usually because of a FICO score. They're almost always credit score driven, right? So conventional is better. And here's FHA. So we talked about how you can get rid of PMI, right? There's all kinds of ways. You know, once the value is there, you can buy it down. You can, you know what I mean? It automatically comes off, all that. FHA, it stays on for the life of the loan, which is another reason we try not to put somebody in FHA unless we have to. And the only time, if they put 10% down, it can be canceled after 11 years. So that's a long time to keep, FHA mortgage insurance on there. And again, that one's not called PMI because it's not private. It's through HUD FHA. So it's more just called mortgage insurance. Typically you'll hear that. But the upfront 1.75 is usually, so it can be like, $5,000, $6,000. And that's tacked onto the loan amount. Usually they don't come into closing with an extra $5,000 or $6,000 on an FHA loan, but they do add it to their loan amount. So, I mean, it's real money. They're paying that off, when they pay their house off. But there doesn't have to be upfront conventional. So now we'll get a little more confusing. if we have a buyer that wants upfront and doesn't want monthly, they can do that. There is such a thing as upfront conventional mortgage insurance. But you would typically not do that when a market is completely, maybe what are we saying, 1% a month? You guys as agents, right? Probably 1% a month in appreciation. You're not usually going to have upfront mortgage insurance that people want, because you're going to get rid of that PMI fairly quickly. So the cost of upfront PMI and no monthly can get really expensive. So we'll typically, in this market, now if this market changes, it may go back to where some people want upfront and no monthly, but that's not a norm with a hugely appreciating market. So that's VA, USDA or rural development that also has monthly insurance, but it's a little bit cheaper. We talked about recasting, direct. I just kind of wanted to make sure I hit everything that you guys might want to. Owner occupied primary homes. I think that's it. I think I've kind of gone through everything I would want to go through on the PMI, but I don't know, is it clear to everybody? Are there questions? Do you feel like you could, talk about it?
I just have one request. Can we go back one slide? I was reading while you were talking and I didn't.
Yeah.
Thank you. Okay.
Honestly, I feel like I just learned a lot of things that I didn't know about PMI. So thank you, Rob.
Things you did or didn't want to know, maybe, huh? Maybe more than you want to know.
I think good. Like, to be honest, and this, I'll touch more on this in a second, but especially the difference between if you've owned your home less than 2 years versus like 2 to 5, and knowing that difference, especially from a marketing perspective, I think is important. But before I dive deeper into that, we'll see if anybody else has questions.
I just have a real world example kind of thing. So scenario, a person buys a house about say 25,000 under market value. I know that sounds insane right now, but they were renting and they purchased it from the owner. And they've totally remodeled the house. So updated it. I think they put 3% down. So they're already, and their market, this is actually in upstate New York, their market is increasing. Everybody wants to get out of the city, and that's still the case since COVID. So the market is really moving pretty quickly there. So it's actually a buddy of mine. So like, if you were to talk to him, what would you suggest? So he has PMI now, but I know it's only been about 6 months since, actually like 4 months since he's closed.
Yep.
It's with KeyBank. I'm not sure if it's been.
Hey, Mary, will you go back to the first slide?
Yes.
So if you could, if I were kind of guiding him, how would you do that? So somebody with equity, with more equity.
Well, you just say the same thing I do, because if he's not with NAF, you have to say, call that lender and see, because like I was saying, if they have overlays, and I have no idea what that lender is going to do, right? Because they may have overlays that say, nope, nothing after, nothing, under 3 years, or, which I don't think they can do, because Fannie and Freddie allow it, but who knows I don't know what overlays they're allowed, because we don't have them.
So the two options would be, they would take their original lender and see how long and how much equity to get out of the PMI. And then the other option would be to refinance, although that's a ton of closing costs that they've already paid recently.
Yeah. People just go, oh, just refinance out. I'm like, well, yeah, if you want to pay another $5,000-6,000 closing fee, that's not, you got to make up a lot of PMI months on that, right? So that's not always and if interest rates go up that's not a good, I don't use that as you can refinance later. Like, I never say that to anybody, because that's not a good option, or you don't want to just take that for granted, right? Because that's not something that can happen. But but like I was saying, the first thing they want to do is call their lender and say, I've got some good equity here. I know this is what my house is valued at. They could do an AVM, you know what I mean? That lender should be able to pull up some value on that home.
Okay.
And they're going to tell them exactly. I mean, it's one phone call. I mean, seriously.
Yeah.
Call your service, not who originated the loan. not their loan officer, because we would have no clue. The whatever company is servicing their loan, wherever they're making their payment to, you call that customer care or customer service line and you tell them, I think I want to get rid of my PMI. You need to walk me through this. And that's what they have actually just special people that just handle those calls.
That's what I wanted to know. Okay, perfect. Thank you.
Yeah. Like these are the general rules, and these are kind of what but yeah, who knows what that servicer follows for rules. Hopefully very similar, and like I said, if it's because they have a bunch of equity really early on, that's a very subjective, substantial. What is substantial? That lender's going to decide what they consider substantial. Does the price have to double? Is it 30 grand? I don't know, right? Like, what do they consider that? It's a little too subjective to even give, too much info on, but that's what Fannie and Freddie say. So any other questions I can help with? Did you have a question, Mary?
No, but I mean, I'm already, so like this slide you'll see for an example, like that taught me a lot, just because I think it might, like, if I were to rewrite this caption, I would change that last line, and I would change it to say, talk to your, mortgage company service department, something like that.
Right.
So that's good information to have, just because I think people get easily frustrated when they get, the runaround of, no, go talk to this person.
Right,
and so
right.
being able to just guide people to the right direction right away, I think is huge. But what I wanted to chat about on my end, and thank goodness for Robin, you have very, very good explanations on a topic that I think can be kind of confusing. So from a marketing perspective, we do have content that is already pre-created and can be co-branded. So these are 3 of them. You have, I like this one the best. If I had to pick a favorite, I think this one's really cute. Similar. So these 2 are more so in regards to today's like equity going really high. That's going to be a little more relevant than obviously for people who have already owned their house for 2 to 5 years. Mm-hmm. Robin, actually, question on that. What if it's more than 5 years?
Well, so then as long as it's more than 2.
Okay.
But
that's just what I wanted to verify.
Yeah. It depends on when are you getting to that automated. You might automatically have bought it down enough now, to where it's going to be automatically removed, but you still, you can usually get it removed much faster than that. So,
okay. Let's look at these first 2 graphics. So that caption minus the last line, like I said, I would have changed that. This is more so in regards to to our point about people who have had their loan more than 2 years. Home values have risen exponentially. So a way that you're going to you could market that information is, did you know you can potentially get rid of PMI without refinancing? So that comes into play for people who maybe already took advantage of refinancing, like last year when it was like the boom for refinancing, and maybe don't necessarily want to do it again, or just don't really want to go through the hassle of a refinance or the costs associated. So that's where 2+ years, higher equity could really come into play. For those of you who have been in the business for a few years now, reach out to anybody that you've done this with, or that you've ever had a buyer more than 2 years ago. Reach out to them. Just say, hey, I'm not sure if you've refinanced recently or thought about getting rid of your PMI. I'm not sure if you even know where your PMI is at, but it might be worth talking to the servicer of your mortgage company. That's the verbiage you want to use, to see if you might be able to get rid of that PMI just based on your home equity. So I love that. I love that idea of doing that personal touch to those people that you've worked with 2+ years ago. So doing that via email, phone call, whatever it is, great reason to touch base with your database. And then looking at this one on the right. So this then is refinance focused. So that is obviously still an option, especially for people who maybe have okay, let's look at me as an example. I haven't owned my house for more than 2 years. I have not done substantial enough improvements that they would probably give me the go ahead in that regard. And I also haven't brought my principal, I haven't done some giant lump sum. So I don't think I would qualify anyway, just saying. But anyway, I could look into refinancing if maybe somebody falls into those parameters or didn't take advantage of refinancing last year. So that, and I once again, we're not going to say, rates are this level, because Robin will be the first to tell you rates have so many factors that go into them. But this is another thing that you can talk to people about is, hey, do you feel like you missed out on refinancing last year? Like, don't worry about it. Rates, here's the verbiage I use. Rates are still near historic lows, because it's a fact, they are. But you don't want to be quoting like, yeah, rates are this, rates look like that. Like, even lenders can't do that just because of how many factors there are. So that's so you could be marketing about, higher equity, get rid of PMI without refinancing, or you could also talk about, yeah, if you missed out on refinancing last year, here's a lender I know, talk to her. It could help you get rid of your PMI. You could take money out to do home improvements. You could lower your rate. There's obviously so many benefits to refinancing besides just getting rid of PMI. But if it's not something you've either posted on your social media or sent out an email blast or reached out to your database for, the refi thing is huge. And I'm not sure if you saw or heard Robin talk about, but I think it was like end of last summer, they put that refi fee on there. Now. So that was reversed. There's no extra fee. It's technically more affordable to refinance now than it was like this whole year. So
yeah, the government put a fee on everything last year, and then we've just been able to remove it. So
yeah, so that's pretty exciting.
Yeah.
And then I also want to show you guys just a custom something. And if you want this co-branded, I'll figure it out. I can make that work. But this is just a custom one. This is geared towards Instagram. Obviously you've probably seen on Instagram, like the swiping graphics. So I put this one together just in regards to giving a little bit more information, like how people can get rid of PMI, how that's tied into the home values. I give you a caption idea there as well. Just something if you're trying to differentiate maybe what you're posting on Instagram versus what you're posting on Facebook, while still providing good info. So you can make custom graphics about this, but I would be careful if you do anything custom, and if you just based on compliance aspects, mortgage compliance, super intense. So if you need, Robin or I to look over your verbiage, let us know. Or obviously you can always request some of the marketing that we have available to you. So if you're interested in any of the graphics or the flyer or like these little swipey graphics, let us know, send me an email. I'd be happy to do that for you, as well as give you these caption ideas as well. But just want to make sure, because obviously, Robin is really great at teaching all this stuff, but I'm still constantly learning as well. And so sometimes it's a little hard to figure out, how do I share this with people? We are here to help you with that. Any questions on any of that?
No, and I would also say, like, people just think every lender is the same. Everything's it's not. It's they go onto the internet websites and they find, oh, this is a really good rate. Of course, they may not close on time. Their approval's really not any good. And who knows what the back end is like, the servicing and there's all kinds of nuances in this stuff that people don't sometimes realize. And later they go, dang, I wish I would have. Okay, well, now I know, too late. Because it is what it is once you've closed, but there are reasons to use lenders that are direct or, are a little easier with this kind of stuff.
Shameless plug for Robin. Like I said, it can feel like kind of a complicated topic, so don't be afraid to reach out to us if you just need a little bit of guidance on how to talk about this with people. But I highly, highly, highly recommend either doing an email blast, or honestly, if you have clients who you worked with more than 2 years ago, give them a call. They might not even know this is a thing. I would have never known this was even possible had Robin not said it in a random team meeting like a few months ago. And so doing that personal touch, helping people save money, they're going to love you for that. So it's a good reminder that even though it's not necessarily directly related to them using you to buy or sell a house, they're still going to be appreciative that you're sharing that information.
Mm-hmm. Yep. it's just a good touch point. And, you know, it's a reason to get in touch with someone or just something out there that people might react to. And this, and with the houses appreciating the way they are, this is a hot topic. So, and we want people to save money. So
Heck yeah.
it's always good.
Any other questions?
Did we get through all of our slides, Mary? I think
Hi,
we did.
Marta.
Hi. So
Yeah.
do we just schedule you, Mary, like you, is that what we do? Just schedule with you to get, say, an Instagram story or a Facebook post put
If
together?
you're looking for graphics, we don't even need to sit down about it. You can just send me an email and I'll send you some marketing goodies.
And then you able to change them around for you?
Yeah, so I'll brand them to you specifically. Yep.
Perfect. Okay. Thank you.
Easy peasy.
Yeah. We like to make people, we like to make life easier. Yeah, the rest of the slides were literally just a really boring legal disclaimer, and
Yay.
thought I'd keep that in there just for effect.
Yeah. It's always good.
But
Okay.
anywho, we're done early. You're all free to go.
Yeah. Unless you want
It
to,
was good to hear those terms again.
yeah, or any other mortgage questions, I'm happy to help. So.
Yeah, I'm interested in those marketing materials, Mary Kay. Thank
Cool.
you.
All right. Got you down.
Yeah, use them. They're good.
All righty. Well, we
All
will
right.
talk to you
Thank
all
you.
later.
Yeah. Bye, guys. Thanks.
Thank you.
See you later.